Firming early on, but you've got a reminder, do you not, of the markets that it plays in. It's kind of a tale of two continents, is it not? North America stabilising, Europe still back-footed.
If we have a look at Iluka, it's come out with production numbers, and we have seen a tumble in production, almost 50% there, but I don't think that was wholly unexpected by the market. If we have a look at Iluka, it's involved in mineral sands, so looking at zircon and titanium dioxide. And if we have a look at what powers along this market, I mean, these products are used to make paints, to make tiles, ceramics, and really powered along by the housing market. So China's been a key driver, as has North America, and of course most of the growth has come from the China side of things. We know that the housing market in terms of building has been subdued in terms of China, and demand for these products has also been subdued. So what we're really seeing is falling volumes as well as increase in production costs for Iluka. So it's not a good combination. Zircon, I guess we are seeing a bit of stabilization and a bit of improvement, especially demand coming through from America, but titanium dioxide, especially the rutile and synthetic rutile products, is where the pressure still seems to be. Now, we're seeing the first quarter production numbers out today, a fall of around about 50%. And if we have a look at what Iluka has said, they said in the second quarter they're expecting for all synthetic rutile to remain idle. Now, if we have a look at Iluka, it's the #1 producer of synthetic rutile in the world. It makes up about 50% of the market share. So I think this is just a reflection of where demand is at the moment, and Iluka in the position where it can adjust supply to demand, and that's really what we're seeing. So all in all, still a difficult market, and we're really looking for a strong bounce in terms of the housing market to really drive some of their products which are used for things like paints, tiles and ceramics.
Outperforming the broader market with a fall of just over 0.3%. Q1 production numbers today, you know, weather woes in the mix here, clearly showing through in the numbers?
We've actually seen a rise of 55% in terms of production, so coming in at 21.9 million barrels of oil equivalent, and of course that's mainly due to Pluto coming online. So if we're comparing it to the previous corresponding period, we weren't seeing that Pluto ramp up, but the fact that we are seeing Pluto now coming through in the production numbers is what really has boosted this this quarterly number. Now, the numbers come in line with expectations. It looks like Woodside Petroleum really still able to reiterate its full-year forecast, and it's very much on track to meet those forecasts for 88 to 94 million barrels of oil equivalent. So I don't think any huge surprises coming through from Woodside Petroleum today. I think the production numbers in line with expectations.
Reaction to that one?
I guess if we have a look at Fortescue, we know that Christmas Creek and Firetail are ramping up, and that's really been reflected in the numbers. Quarter on quarter, we have seen a rise of more than 50% in terms of mined and in terms of production. But I think shipments were only up by around about 3%. We have seen cash costs falling with Fortescue, and that's natural. As we see more volume and more ramp up coming through for Fortescue, we should see those cash costs starting to come down. And this is a pivotal year for Fortescue. This ramp up that we're seeing will mean that it's a much lower cost producer. It'll have a lot more volume to be able to sell to the market. But of course, it comes at a time when we're seeing extremely volatile commodity prices. So a double-edged sword for Fortescue. On one hand, you know, capital expenditure is expected to peak this year as it ramps up these key projects, and we have seen a ramp up of Firetail as well as Christmas Creek. But on the other hand, you know, share price performance by these key commodity players really quite lackluster, in fact falling very sharply today. So unfortunately, not a good day to be releasing results, and I think we are seeing a lot of selling across that material space because there are a lot of nerves in that commodities complex.
And as well, they're talking about market conditions there remaining strong in the March quarter, but then alongside that we get a break of the copper has fallen 3% below the 7,000 tonne level in London on growth woes. So Julia, is that kind of an historic observation from FMG now in light of all the latest moves for Dr. Copper?
I think what we are seeing is demand still staying relatively strong, but what we are seeing is excess supply, and we're seeing that in the copper market, we're seeing that in the iron ore space as well. And really the volatility that we've seen in terms of gold prices means that there's nervousness that perhaps it could happen in other commodities or even stocks. So there's a lot of nervousness out there on the market. Today is going to be probably quite a volatile day for the Aussie share market, and that's because it is index derivatives expiry. So we do see see the index jumping around quite a bit. But as you mentioned, we are watching BHP, some key technical levels there. We have a look at BHP in the 30-day chart. This is what it looks like. You can see that we've just seen a plummet, and really we have to look at least a 2-year chart to have a look at some technical levels for BHP Billiton. You can see that back in 2012, the low was around about that $30 mark, which is where we're watching at the moment. And of course, if we see a break of that $30 mark, we have to go even longer and have a look at a 5-year chart. And if we have a look at a 5-year chart, you can see that's a 2-year chart. Let's go to a 5-year chart. You can see we're looking at levels that we saw during the global financial crisis. So looking at that $27 level next. So some key technical levels coming up. As Evan mentioned, there's been some calls that, buying BHP Billiton over in London, and I think that was Charlie Aiken from Bell Potter with that call, and that could be a good one if you're looking at playing the currency as well as some of the big blue chips in that mining space.